If you enjoy this content, please take a moment to rate and review it. Your feedback will greatly impact our ability to reach more people. Thank you. Hey man, how's it going?
Going well. I'm good. Things are cruising along in Nashville. How about you?
So I'm glad to be off the road for a minute. I got back into Mexico City last night, and in time to watch the kickoff of the World Cup today. Mexico won.
Mexico had a big win. Yeah.
Yep, big win to start things off here in the city. So that's obviously being celebrated, although it's raining right now. So I'm sure a bunch of people are caught outside. Probably biggest thing for me this week is I spent the start of the week, Sunday through Wednesday, at HFMA Annual Conference 27 in the National Harbor. By the way, the Gaylord National Harbor is gorgeous. What a really nice facility it is. Yeah, really nice for conventions.
Miami?
No, National Harbor. So like in DC area. It was a great conference. I got to close out the show because so I was installed as chair elect, basically, right? Matt Cox was installed as chair, who's the CFO at Corewell Health, great guy. So that was fun. See him get the thing put around his neck and all that fun stuff.
Yeah, and basically a year, 12 months from now, that'll be you, right? That's
correct.
How it works. Like you have a year of chair elect. Yeah,
correct. So the chair elect closed the show, and our closing keynote was Emmett Smith. So that was fun.
That's pretty fun. Yeah.
So I got to take some pictures, chat with him a little bit, and then, intro him for the speaking gig. He was great. He was, he actually didn't talk that much about the NFL. It was largely about like his childhood and up through high school.
Oh,
and then he talked about like Dancing with the Stars. He did talk about the NFL, but a lot more of the lessons came in the things that people don't know him for, right? You know what I mean? So that was really cool. But on the important front, two strong representatives from the Trump administration on the healthcare side were in attendance. I don't know his official name title, but they're calling him the affordability czar. So Casey Mulligan, who's recently positioned as the affordability czar, is basically like chief economist for HHS. Reports directly to Robert Kennedy Jr. He was there and he did like a 15-minute talk before a power panel with Seema Verma and Mike Marks from HCA. My buddy Scott, who's the secretary and treasurer for HFMA right now. It was definitely interesting because Casey Mulligan's basic talk was about supplemental payments and kind of presenting how they work. And he called it like a tango, and basically said like, this robs the American public and we're going to stop it, And then his other big position was that we need to, which I've definitely agreed with, was that we need to make it so that more small businesses can participate in the healthcare economy and help to make healthcare better. So, he has a past history working with the Small Business Administration. So I think that's kind of a strong position for him. And then Dr. Oz was also there. He did probably like a 20-minute talk and was really focused on making healthcare better through price transparency and leveraging technology, which is kind of just the consistent messages that, we've been getting from this administration, right? Which is why I think you and I feel that for this period of time, there are tailwinds for healthcare innovators, right? I mean, because these are the things that make it possible for more competition and more emerging players to enter the scene. So it was, it felt pretty meaningful to be there and to have those representatives from the administration come and address the audience. But besides that, it was a great conference. The whole HFMA team did an awesome job, and I'm proud to be associated with that organization.
Well, and the HFMA audience is the exact right audience to give those messages about price transparency and getting costs down. I mean, that's all the finance talent in the industry sort of coming to the conference. Yeah, so I think the administration is going to be pushing pretty aggressively in this direction, which might be bumpy, but it's in the end good.
I think everyone kind of looks at this and says it's inevitable. You just look at all the pressures, and you back away from healthcare. You just look at sort of the national debt and some of these other pressures and the pressure on households and inflation and some of these other things. And it's like, something's got to happen, right? I mean, it's like we can't keep doing what we've been doing. So I think the other thing is that there's been plenty of pain to go around, right? So I think it's hard for any particular sector of the healthcare industry to feel picked on because, everyone's been getting it, right? Whether it's like drug negotiations, Right. You know, drug negotiations or Medicare Advantage or supplemental payments. It's like a little bit for everybody, a little bit of pain for everybody, right? So, okay. Anything else before we get going? We got a good show lined up.
No.
All right, let's dive in. All right, starting with inflation. Inflation jumps as the Iran war intensifies, 4.2%. That's pretty serious, right?
Yeah. I mean, it's good and bad. I think the bad is that for the overall CPI to jump up that rate is pretty concerning because we can't sustain that. No. And also it hasn't flowed. I mean, the core was not up as much. It was up a little bit, but so it hasn't really propagated through, from energy into the overall economy, but it's coming. And so like we know it does propagate through. There's still a hope that the war ends and the strait opens up and energy prices come down, but the clock is ticking. We need that quickly because now we've seen the energy prices jump up and it's going to propagate through. It's hard to say if it's 1 month, 3 months, 5 months, but it's soon.
Yeah, and just to be clear, that propagation is really a compounding because just because it hasn't hit the core doesn't mean it hasn't hit the household, right? I mean, we all either are personally experiencing it or have heard from friends and family who are talking about gas prices, right? And how much it costs to fill up the tank. And that is real, that is real. So the fact that it hasn't hit the core doesn't mean that it hasn't hit the public. If it hits the core, then it compounds right into all the other things that you need to buy. And that gets really, really scary. So let's hope that it doesn't, but that is a very steep jump. That is a very, very steep jump. And I think it basically makes it impossible for the Fed to, cut rates, right? I mean, it's just.
Yeah. It compounds if it goes into the overall economy. It also is hard to stop. Like once it gets out there into all these prices, employees want more raises, and then employers raise money to pay for that, and you get this cycle going. Whereas energy, you could reverse energy prices fairly easily if they would just open up, end the war.
If you get to it fast. I mean, clearly, if we just take a snapshot of the last week, I don't think there's any reason for the American public to have confidence that this war is coming to an end anytime soon.
Yeah. I mean, I saw a clip on CNN where they had Trump, saying we're about to make a deal across like 60 days. Every day he had said it across, maybe it wasn't 60, some large number of days. So I think we don't have any idea what's going on. And that doesn't mean that they're not going to end. It just means that you can't believe sort of what comes out of the tweet storms and things there.
Well, I think the bottom line is we're not entirely, in control, right? It's like, it seems like the U.S. government is pretty committed to bringing it to an end, right? I don't think the Republican Party wants a war going on as we head into the midterms, right? We just ended the primary. So this is not a good thing to have kind of festering and going on. And there's even sort of Republican splintering in terms of, the Senate voting to end the war and a variety of things like that. But we don't control it, right? It's like we can say something, but then you got Israel and Iran kind of doing their own thing, Right. And as long as they're doing their own thing, we're subject to it. It's really more about whether or not we're going to stay engaged or not, right? That's the only, I think, clear decision we have. We don't have a decision about whether or not it ends because we're not even really a first party to it. So
I think that if we wanted to have influence over Israel, we probably could, but I don't know that we have unanimous consent around that. It's all over the place.
Yeah, I think that's right. Okay. SpaceX IPO draws at least a $5 billion order from BlackRock. Other large asset managers made similar requests, along with fervent interest from individual investors. So do you want to talk specifically about SpaceX, or do you want to talk more broadly about this cohort of IPOs going out and the amount of capital that they are looking to pull into their IPOs?
Yeah, I think SpaceX is going to be trading tomorrow, And so I was going to talk about that, but you're right. There are these 3 big IPOs that we should probably, continue into the whole thing. This story is about the significant oversubscription. I think Elon was trying to sell 75 billion in new issuance. He's only floating 2% of the company, 1% of the company, pretty small float. And then there's going to be a lot of insider sales 6 months from now. And so it is important to have oversubscription because there's going to be a lot of people selling over time. And he seems to have it. I mean, it was reported by one of the leaked from one of the banks that there was 70 billion in individuals trying to buy. And then BlackRock is buying 5 billion themselves. So everyone's kind of trying to get access. I think Elon is a different human than the other CEOs at Anthropic and OpenAI. So I'm not sure this is indicative of that kind of momentum with all three, but I think all three are going to be oversubscribed and very successful.
Yeah, I think that's right. I think that's right. That feels kind of inevitable to me. People are talking about whether or not it's going to be a problem for OpenAI. I think all three are going to do great. I think the thing that I'm highly concentrated on is how much capital is going into them, what that means in terms of these three players becoming new acquirers, and also what it means in terms of a consolidation of capital availability on the private markets, particularly in the venture markets. So I haven't run any studies or any analysis of it. It seems that these three IPOs are ushering in some form of a new era, both in terms of the scale and the value, that the proposed value that they will have. I saw somewhere that SpaceX is not going to be allowed to join the S&P 500 right away, but it really does feel like this marks the beginning of a new equities economy, or at least a new stage of equities economy in the United States. Does this feel that monumental to you, or does this just feel like three companies IPOing? How do you feel about it?
My gut level kind of intuition is that we are going to have 8 to 10 very large publicly traded companies that basically suck up all the oxygen and most of the revenue and earnings. And these will be three of them. So we've had sort of the hyperscalers in public markets, but then you always had these private market kind of big names as well. And that's getting largely simplified. And one of the things that I think we might disagree on, but we should just talk through, is that I think it's going to be a lot of funds flowing through VC firms back to LPs that by a year, 18 months from now could be good for our industry, because there's a lot of money flowing back to LPs, and we haven't had that for a long time as an industry.
Okay. I think that is a good point. That is a well taken point. I think that's correct. However, I think those funds will predominantly flow from the blue chip firms, who will then continue to sit front of the line for the recycling of LP commitments, which I think will further the consolidation of LP commitments into a small cohort of firms. So I do think you're right. This is likely to relieve some of the liquidity pressure we've been dealing with for the last 5 years in the LP community. That is good. And some of that will trickle down to the broader VC ecosystem. I think that's also true. But the mere fact that that access to these stocks was very much sort of a blue chip game. There's the We funders and some of these SPVs and things like that, and we got to see how all that stuff shakes out. But the legitimate stakes were in the top blue chip firms, right?
I mean, these are all three Silicon Valley direct connections.
Right. So I don't think we disagree. I think we agree. And I think ultimately we'll have to see it as a net positive. And I think it also furthers the consolidation that we see in the venture space. Do you agree with that?
Yeah, I agree with that. I mean, I'm hopeful that it bifurcates to sort of a barbell kind of market where you have very large firms that blue chip or whatever, but they're multi-stage and multi-billion-dollar funds. And for a long time, I was questioning if you could get significant returns there, but SpaceX and OpenAI and Anthropic are going to be really good returns with significant capital invested and even more returned.
Yes.
And so I think that's gonna entrench that very large, dominant, maybe it's 15 firms that sort of are the blue chip firms. And then I'm hopeful there'll be an emerging kind of, pretty small GP level where maybe sub 200 million, you can also in niches do well, but that's also me maybe hoping. We'll see.
Agree. All right, VC rundown. Surgical AI startup Uncovr emerges from stealth with $7 million in seed funding, and the round was led by Index Ventures. Tell me about this deal.
Yeah, so this is in an OR. It is what I would call augmented reality for the OR suite, for the surgeon. So he or she is working for multiple hours, typically in very small spaces. The example I gave was a kind of laparoscopy where you're sort of using tools, very small incision. It's using AI in real time and overlaying onto the image so the doctor has a much easier time, but it's not clouding out what the doctor has actually seen. So it's not a VR, which we've had for a long time, that doctors don't really prefer because it's too removed from, you might be cutting right next to an artery and you need to be exactly right. And they're used to doing it with their eyes. This now, I think, at least the hope is that it augments their vision field and makes it much easier, maybe less taxing on them to go through that time. So it's pretty promising. I don't know how, I haven't talked to anyone who has used it. So it may or may not take off, but I think it's a good idea.
Yeah. And look, Index is a strong firm. $7 million is a strong seed round. So Stepful raises $55 million for healthcare training platform. The company will use the funds to expand its hospital partnerships, launch new clinical education programs, and enhance its AI capabilities. Oak HCFT led the round with participation from Hearst Ventures, Foresight Capital, and City Impact Fund. Stepful is a company that I have certainly been aware of and tracking. They've had a very good run, I would say. This is more proof that their investors have confidence and are backing them as they close out a Series C.
Yeah, I mean, it's a huge market opportunity. We need a lot more healthcare workers trained. It's a little bit of a hard business to scale, I think, but good to see them, raising around and continuing.
All right, moving into policy. So as I mentioned, Dr. Oz was at the HFMA annual conference, and I've already run down what the message was there. At about the same time as that was happening, this post came out from Secretary Kennedy. It really was timed at basically the same time. I'm looking at the timestamp of it, and I'm like, wow, this was timed to coincide with the HFMA appearance. And basically, this is both Secretary Kennedy and Administrator Oz, who are messaging that the time of allowing hospitals to go unchecked in terms of enforcement around price transparency is over. And if you've been in this space for any amount of time, obviously you're looking for areas where there is change, where compliance is a real sort of point of pain. And price transparency has always been one of those red herrings where it's like, it sounds important as a citizen, you feel it's important. However, it clearly is not that important because there's been no movement, and that lack of movement is really about lack of enforcement, right? And so this direct post from Secretary Kennedy's X account is pretty clear. And at the end, I mean, it's like, Secretary Kennedy is basically saying, like, don't think this is a false alarm, like, because if you wait, it will be too late, and you will have some very serious fines levied against you. So I think finally, price transparency has become a real sort of investable opportunity.
Yeah, I think that's right. I also think it'll be good. It's going to bring awareness to what various systems are charging on each payer contract, because it's done by each payer. And so I'm not confident that every American will be shopping for where they get their, new hip replaced. But I do think that our startups and other founders and even larger businesses will use this data to be able to go see, in this metro region, there's not much competition. The prices are really high. maybe I should enter that one. That is healthy, and that will drive better services and lower rates, and everything will be, sort of incrementally better over time. That's how the free market kind of works. And the fact that we have never had that in healthcare has really been an impediment to bringing new technologies, new services, new approaches, because you would spend money on a new thing, but you couldn't deliver better service at a lower cost and have anyone know about it, really.
Mm-hmm.
And I agree. I had read the announcement, but seeing the two leaders very bluntly talking, I think people should watch it. It's 3 minutes and 10 seconds or something. It's very direct. I mean, they seem credible that they're going to follow through on it to me.
Yeah, I have to say, this is very consistent with the positioning and the tone. I will say, Dr. Oz, being a media personality and TV star, is an incredibly adept messenger for this kind of thing, right? Because he positions it as you would want someone to position it, right? Which is to say, talking about all the upside and all the innovation and all the improvement, and how this is better for the citizens, and just sort of arguing on the merits, but in an upbeat way, right? So that his talk was pretty upbeat, but I think that's attributed to his skills as a presenter, right? You know what I mean?
Yeah.
He didn't flinch in the messaging. You know what I mean? The messaging was the messaging. I would say Casey Mulligan is an economist and not a TV star, right? And so he was a little bit more like, this is what it is, and I guess what I'm saying is this X video is consistent with what I experienced live at the conference, which is, take this administration, at their word. That's probably the right strategy, because you can test it if you want. I don't get the sense they're playing. I really don't,
And what they're health systems, I forget the different levels, but at the top of it's $5,000 a day for not being in compliance. And there's over 500 that got warning letters, I think this week, because they're not in compliance, and they're listed. I went and looked at it, and there's 500. So, but they're listed by name, divided by state by state. And so I think they are tracking it, and they're going to start sending out fines in maybe 60 days. I forget. They said it on the X thing, but it's pretty fast.
Yeah, no, they're not playing around. I want to just point out, you grabbed this story from MedCity News, where it pulls out the key 5 themes that Administrator Oz talked about: fraud, waste, and abuse, drug pricing reform, tech modernization, preventative health and nutrition, and deregulation. These were the very clear 5 areas that he focused on. And it's just kind of consistent with Maha, and consistent with what they were saying a year ago.
Yeah.
To me, nothing is really changing. So again, these are... And look, I guess what I would say is, fraud, waste, and abuse, there's certainly opportunities for technology companies to help there. Drug pricing reform, I think both in Foundry and in Novo, there are portfolio companies that are, focused on different things with drug pricing, GLP-1s, et cetera. Tech modernization, obviously, that's entirely, what we do. Preventative health and nutrition, we have, several companies across the portfolio that focus on that. And then deregulation just means that, innovation gets to move faster. So again, these things, I think, are going to find a very strong support base amongst investors and entrepreneurs. Objectively, who have been very frustrated with how difficult it is to innovate in this industry.
So 2 things that I am realizing. One, I think most Americans will be in favor. It's presented in a way, like you said, that most Americans will say, yes, I don't want fraud. Yes, I don't need lots of regulations where I can't figure out things. So Kennedy really has done a good job from, his candidacy for president to evolving to sort of partner or align with Trump. But he has maintained most of his, or maybe all of his Maha thesis, and been able to he's been there for 18 months, and he seems like he's building momentum more than kind of fracturing it all. So yeah, I think they have a lot of momentum, and we'll see what happens, but it's going to be great for innovators, and I think in the long term, good overall for the whole industry. But if you're an incumbent and sort of relying on supplemental payments or price, in transparency, I think those days are, quickly ending.
Just to tap in on one point you made, you talked about, RFK from the presidential run up to, where Maha is now as kind of the core platform underneath HHS. I totally agree. And my sense is that, they have, I think, correctly assessed that across all the different issues that Americans care about, right? We got the Iran war, we have inflation, we have immigration, that continuing to push very aggressively with this healthcare reform agenda is not politically expensive. Like, they're not going to lose any points with the general public, swing voters or otherwise, by continuing with this agenda. And so that's another thing, right? Is if it's not politically expensive, I think that starts to dilute the effectiveness of lobbyists. You know what I mean? Feels like the Overton window is definitely here.
It'll be an interesting time to be chair of HFMA next year. As all this comes into force.
No, dude, tell me about it. I mean, listen, next year is when the supplemental payments, cliff starts.
Right.
So
it's going to be hitting in the spring, right as you are taking the stage. So
correct.
I mean, you'll have a lot of impact at a really critical time, which is great. But it's also going to be a lot to do.
Yeah, I mean, look, the chair is representative of the organization. The chair doesn't personally have impact, but I think in terms of the front row seat that the chair has, I think, yes, I agree with that. Like, I will definitely be front row for some amazing transformation when it comes to the way that healthcare finances work in the United States. I very much agree with that. Yeah. Going to the payer side, Blue Cross Blue Shield of Massachusetts partners for lower cost drug alternatives. Gemini Health connects to the EHR to show prescribers lower cost drugs that are aligned with the Blue Cross formulary. So this is really interesting. Blue Cross Blue Shield of Massachusetts, which is a very strong BCBS, empowering prescribers at the point of prescribing to see the different costs and basically be a real-time advocate, informed advocate through price discovery for their patients. This seems pretty good.
Yeah, this is a great benefit to the patients, I think. I mean, often there are a couple of choices that a doc could prescribe, and they may have a preference one or the other, but they may be asking about other drugs you take and other considerations. And I think price being added to that is really beneficial, because unfortunately, a lot of patients get a prescription and then they go to fill it. I mean, I've had this happen before. And I mean, it was $20 a pill, and I have enough money, but I had to think, like, do I really need this $20 pill every day? And so I ended up changing. But knowing that ahead of time, where the doc could advise you, well, it is expensive, but here are the benefits, and that's better all around. You're educated, and you can say, well, maybe that's great, but I can't afford that. Let's go with the other one that's different. Or you might really want the more expensive one once you understand the differences. Having the doc positioned to give advice like that is really good.
Agree. Going into pharma, GSK to buy Nuvalent for $10.6 billion in oncology push. The pharma deals around oncology continue.
This was a big one. GSK sort of has come back strong in oncology. They had gone away from it for a little bit, sort of shedding some things, but oncology is a huge area.
All right. Novo Nordisk weight loss pill prescriptions hit 3 million since launch. More than 80% of the pill prescriptions are for patients new to GLP-1 drugs. I got to give you credit. This was something you predicted right in the very beginning, that, once they shifted from the shot to the pill, I think you probably said somewhere around 5X. And so 80% of the pill prescriptions for patients new to GLP-1 drugs, that seems to line up with your thinking.
Yeah. And I'll take the credit, but I think where I was totally wrong is the adoption of the shots, right? So it's a huge growth over a much bigger uptake than I thought. So I was right about the pill, but I was totally wrong about the adoption of the shots. And overall, I think GLP-1s, and then there's several other related medicines in the pipeline. It's a whole new way to think about treating chronic disease broadly, starting with weight loss, but almost every chronic disease. And it is a way to help patients with changing their behavior. which is great. And there's lots of things to think about and concerns with any medicine, including GLP-1s, but the adoption is significant, and I think it's going to keep growing.
Agree. Apotex shares rally as trading begins following pricing of $1.3 billion IPO. That's Canadian dollars. The drug maker's initial public offering is Canada's biggest in years. So big win for a Canadian company here.
Yeah, and I want to everyone, including us, are talking about these 3 big IPOs in tech. But we had a good pharma IPO in Canada, raised $1.3 billion. So I wanted just to note it. It's good to celebrate these things. I think it's healthy for us to have another publicly traded pharma company. Mm-hmm. And in pharma, often that might not be the last M&A transaction. That they might sell to a big one, but I think positive.
Yeah, I agree with that. I mean, capital is turning over, right? I mean, there's some big capital turnover taking place. I mean, we haven't really talked about it, but I think that's got a lot to do with Bitcoin, falling off. There's just this broad capital rotation that's underway, and people are getting their dry powder ready to participate in this new wave of IPOs. It's something to watch, and I think it's going to, in some ways, reset the business cycle, that has taken a long time to reset it. Several people have said business cycle's always been 4 years, but for various reasons, this one is sort of a 5-year business cycle. So hopefully that means the back half of the year, we've got some some liquidity and a little bit more risk on, and hopefully things are a little bit more fun. Helping us, the Wearable Showdown, Oura Ring 5 versus Fitbit Air versus Whoop MG versus Apple Watch. All these wearables have rolled out new versions. What did they find out? What's sort of
so this one reporter wore them all for a week, I think, but there's a sleep part. Keep going down. She shows each of the sleeps. She did a sleep study, so she got actual sleep result, and then right there. So you can see the actual sleep study factual thing, or the best technology we have. I've done that before. It's not fun to sleep in those things, but they're very accurate. But then you have the direct comparison for that same night. So I mean, there's lots of comparison things, but this chart I thought was worth talking about.
So if I'm reading this correctly, it looks like the Fitbit Air is the closest to getting it right. Am I understanding that?
Yeah, I think that's right. Yeah.
Yeah, the Fitbit Air only miscategorized one segment. The 5 a.m. segment is deep. Versus the sleep study. This is assuming the sleep study is the accurate one. If we're trying to sort of
right, I'm not sure
calibrate
that's
to
right.
that.
That was my assumption. Right.
If we're trying to calibrate to that, but yeah, it looks like the Fitbit Air, interestingly, nailed sleep better than any of the other ones.
And Oura and Whoop, I would have guessed that Oura and Whoop would have been the leaders, but they're really not in this study at least.
Yeah. Oh, actually, no. I misspoke. It's a tie between Apple Watch and Fitbit Air. Both of them are only off by one segment. Apple Watch is off in the 2 a.m. segment, and Fitbit Air is off in the 5 a.m. segment, whereas Whoop is way off. And Oura 5 is also quite off. So pretty interesting. Pretty interesting. Looking at here's the heart rate. So let's see.
Same thing. Chest strap is like the best we have.
Chest strap is the best we have. That's right. These all look like
I thought they were all pretty good. I think they're all. My takeaway from this was they're all pretty accurate on the heart rate.
Yeah, Apple Watch and Oura had a dark spell. It's my experience with Oura is it gets a lot of you get a lot of windows where the data goes bad. There's just like a lost segment of data. So seeing that here is kind of my experience. I have an Apple Watch. I'm wearing one right now, but I never really dig into the data that much. So because I just kind of consider it like a fun wearable. I would say again, Fitbit Air, and I'm just eyeballing it, but Fitbit Air does appear to really be tracking it pretty closely. And Whoop also appears to be tracking it pretty closely. And this is kind of what Whoop is known for, right? So Fitbit Air is, I think, from a form factor, is pretty much modeled after Whoop. Interesting. Fitbit Air is looking like a pretty strong device for sleep and heart rate tracking. Okay.
Yeah.
All right. It's a great article. All right. Switching into crypto. Web3. Coinbase launches tool that lets AI agents trade crypto and make payments for users. I saw that Brian Armstrong was on the Moonshots podcast. I was like wondering, like, why is Brian Armstrong on a podcast that's entirely about AI, right?
Yeah.
And this explains it here. That they've launched this tool focused on the agentic economy. Did you dig into what the capabilities are here?
Yeah, it's you can have your agent trade stocks, trade coins with you, trade anything that's on Coinbase.
Oh, really?
Yeah. Oh, yeah. You can, like, the example was you can have it rebalance your portfolio every week, for instance. That was the example they were giving. And then also that they're letting agents sort of make payments to each other and to users. And then there's the same kind of story from Mastercard is the next story, because we should just loop them together. It's very similar. They don't have the trading side, of course, but they have a broader kind of portfolio of partners that are focused on the agent economy. And I think this is 6 months early, but I think it's useful for us to tell our audience sort of that this is coming, and these firms and others are building the infrastructure for the agents that are going to start trading amongst themselves, I think, before the end of the year.
Yeah, I mean, so I do have to say that this to me really outlines Coinbase's distinction and advantage against really, I would say, all the other players, right? The difference between them and Robinhood is that they were crypto first, which really means that they're a stronger technology firm than Robinhood, right?
Yeah.
I don't think they're stronger on interface, but they're certainly stronger as a technology company.
Yeah. I mean, they incubated Circle. Circle grew out of them.
Yeah. And it's like this is going to be a very durable advantage for them for the long term, because these other, the Fidelities of the world, the Charles Schwabs of the world, right? They are simply not going to move this fast. And if you're moving at the pace of AI, you're going to have these massive market capture windows. Like, to me, it's like, okay, you're saying it's 6 months out, and I would say I bet in 6 months they will have basically captured the agentic economy. It's like by that time, it's like all these agents will have built all these skills and built all these best practices and built all these like memes and all these things, and they will have just chosen Coinbase. Like, that's it. It's like there's not going to be time for these other platforms to catch up. So this is just long Coinbase, actually, really.
I think that's definitely one of the takeaways. I think there may be very low switching costs, so that I think they will get an early huge advantage. I think Mastercard and Visa are both trying to push into that too. But I also think that there might be price compression, and it's not that hard for agents to switch. I mean, it is a hassle for humans to switch all the infrastructure, but I don't know that it's going to be that difficult for agents to switch somewhere else. So they will have to sort of be competitive on pricing, which is healthy, right? But they'll have an advantage, definitely.
Yeah, I guess the real question is, why would they switch? I guess my point is, it's just like any market, right? It's like you need to be where there is sufficient liquidity. You need to be where there's sufficient transaction volume. Yeah. So I guess that's my point, is like, if Coinbase becomes like the place where all the action is, it's like, why? Okay, low switching costs, but why would you switch?
Yeah. That's right.
That's like, I mean, you can fork Bitcoin,
Yeah, it'd just be you.
Yeah, right. It would just be me. Exactly.
Yeah.
All right, we're into the AI rundown now?
Yes.
Okay. Abridge picks up strategic investment from Eli Lilly, expands payer research workflows. I gotta say, Abridge is turning out to be more stickier and more resilient than I anticipated. It's still kind of early, but now them diversifying outside of health systems and starting to work on research workflows is very, very, very smart. They're just becoming a sticky name, Yeah, I guess I just gotta give it to them. I thought they might get swept up once the Epics of the world started rolling out their in-house scribes, but it doesn't appear that that's happening.
That's right. They've done a good job sort of understanding the adoption curve, is what I would say. So, certainly ambient listening was the first place that AI was useful and widely adopted. But they're not resting there. So as you say, they're going into the care pathways and other things, and they have a partnership with Highmark. They're working with Lilly now. So I think they are kind of finding those next adopters of AI. And instead of just saying we're an ambient company, they're sort of just, they're an AI for healthcare sort of company.
Right. Right.
Interesting.
Right. Yeah. Okay. Anthropic releases new Mythos-Class model to general public with guardrails. Queries about dangerous topics such as cybersecurity or bioweapons will be steered to the older Opus model. So they're, of course, talking about Fable 5. I don't even have to ask. I know you have used it. So what are your early impressions?
It is very powerful and expensive.
Expensive. It's twice the cost of Opus, right?
Right, twice the cost of the Opus model. That's the one I use mostly. Mm-hmm. But it's supposed to be faster, and I haven't done any kind of like extensive testing, but I've done maybe 4 different prompts to test different things, and my experience was it was slow, like really used a lot of tokens to think and go back and forth, and the result was good. I'm not sure that I have advanced enough questions to really test it.
Right.
The next one we have, the Limitless guys sort of did a bunch of things to actually test it.
Okay.
And it performed. They were really impressed. So I've watched that. It does seem like it has a lot more strength at the edge, like at the frontier, when you're trying to do something like build an entire, they built an entire world model for one. I think it was Yosemite. They replicated Yosemite Park in exact detail on a one-shot prompt. That is impressive. I don't know how often I need to do that, but it's impressive. That's kind of where I am with Fable. It may be that as I learn to use it or figure out how to harness it better, it will be good. But right now, I went back to Opus. And I don't know if we've talked about it with the audience, but I'm now probably 50% on Codex, which is the OpenAI agent or downloadable sort of desktop app harness. Yeah. And so I'm sort of 50-50 now. And they're very different, but I think they're both very strong. GPT 5.5 is a great model, and Opus 4.8 is great. Fable, maybe I don't know how to use it yet, but it's powerful, but it just burns a lot of tokens, and those tokens are expensive.
Yeah, I used it, but I was like on my phone because I've been traveling a whole bunch. So a little bit on my laptop. I mean, it certainly is effective. It does a lot of thinking. That's pretty clear. The thinking feels clear. It has shed some of those like really stupid ticks that Opus 4.8 has. Like honestly, the load bearing part, like just those things that just drive me nuts about Opus 4.8, quite frankly. But I think for me, like the big thing is technically Opus 4.8 is still pretty doggone strong. And I think what I kind of walked away with after, looking at it is it's really time to start thinking about these models and how you would map them to the task you're trying to do, right? Like it's not like we have a plethora of them. I mean, even each frontier lab has a plethora of them, right? You hit the little drop down box and it's like, pick your poison. And so we're getting to the point where I think people have to start thinking about like, what should I use for what? And to me, this is where I'm really starting to look at routing, solutions, because I want the most efficient model for what it is I'm trying to do, and the job of tracking that, like, I don't get paid to do that. You know what I mean? Like that's a hard job. So all of these new models and these new capabilities and, the imbalance in usage out there, right? I mean, if you asked 100 people how many of them have ever built a Claude Skill or a Gemini Gem, I mean, like it's going to be a very small percentage of those 100 people. Yeah. So to me, the next big frontier, particularly for enterprises, is going to be routing. Like routing is hugely important to make sure you're not overspending. period. Just don't overspend.
Yes, no question. I mean, the open source models are really strong today, and they're going to keep getting better. And many of the tasks, so like I have a personal chief of staff named Walter. He runs fully on open source because I'm cheap and I don't want to pay tokens.
What's the most powerful open source model that he runs on?
So he runs every day on Gemma, the Gemini one.
Okay,
that's installed in GCP. Mm-hmm. So he's in a cloud server. There's no internet endpoint, and then I have the open source Gemma model sitting on the server. There's no router.
With him.
And then he has Kimi K2 and Quinn, and then he also through Open Router has access to all the Opus models.
A bazillion ones.
I have found that I never used it.
Really quick, Kimi K2, that's not installed on the server because that's a pretty big model.
No, right? those are both through Open Router, right?
Okay, exactly. Okay, that's what I figured. Yeah, okay.
Yeah, so like his brain, like on the server, is maybe it's like 4 billion or 5 billion Gem. Yeah, exactly.
Yeah, and like, what's your monthly cost for that? It's GCP, it's compute cycles, really. So
yeah, it's like $75
a month to run that natively, and also have sovereignty of inference.
Yes, right. I mean, I asked Walter how many tokens a day he has. Like, if you just ran it full out, and it was like 850 million tokens a day, and I can't spend that many tokens.
Can't use that many.
And especially when you also sometimes you use Open Router to go to one of the larger, still free. I mean, it's a couple pennies because you go through Open Router, and so I think you're exactly right. Enterprise is, I think, one, they're going to not want to have all of their data being learned on by whichever frontier model you like. And they don't want to have Anthropic or OpenAI or Google have all of their data, so they don't want to split it across models. And I think they're not going to want to spend the money on. We're starting to hear CFOs talk about how much money is being spent, and there's not clarity on the value yet. There's a lot of hope that it will be there. I think it's going to be there, but there's a lot of benefit maybe, but if you can get the same benefit with an open source model that you're running on your existing network, why wouldn't you?
So can I just ask you a question about that? Because I so struggle when I hear people say, like, are we getting a benefit? It's like, Vic, we could not run the company today the way we do without it. Like, it just would not.
I'm getting a benefit personally. Yeah.
Yeah, but
you are running the.
No, I was just going to say, like whether it's like investment memos or the budget for the firm, or like the way we're doing things now. Like, could you go back?
Oh, no, I can't go back. No. So I guess let's talk about this, because this is the key thing I'm trying to figure out that I want your opinion on. So
yeah,
I think for personal productivity, which is what I'm talking about right now, I can be much more productive for Jumpstart using these tools. There's no question about that. When you go to a team, I mean, we have a tiny team, so it's really just like a few individuals. But if you go to a team, you go to healthcare is strange. You go to an investment bank, or not an investment bank. You go to Pinnacle Bank, which is right above me here. They have an underwriting unit. Maybe there are 30 people, and they have to work together. I don't know that the understanding of harnesses and context has been adapted to the work setting in a way that it is actually driving the team to do better. I think we will get there, but just the understanding of how to set up a harness for your personal productivity, I wasn't thinking about that at Thanksgiving. So like it's 6 months that we've been talking about harnesses and context. And so just translating that to how a team works together, I don't think we're there. And so I think that's what I think we're hearing is CFOs are saying, okay, I'm spending X million dollars a year. My people are using it all, but I don't see the productivity coming out the end of the underwriting team. They're not underwriting more loans at Pinnacle Bank. That's the tension I don't know, maybe you disagree, but that's what I think is the difference.
So I very much agree. Where I get stuck, though, is I hear far too often that people are ascribing that failure to get productivity to AI, as opposed to
it's not that.
As opposed to their
organizations.
Humans. Yes. As opposed to their organization's understanding of it, right? So if there's many, it's a spectrum, right? But if I had to sort of like just come up with some categories, I would say, okay, first, you have the person who uses the AI chat interface basically like a search engine, like a glorified search engine, to kind of like find things, help them answer questions, things like that, like help them be informed so they can do better work, right? Give them answers. Then you have the person who actually delegates work and produces artifacts. So produces Word docs, produces Excel, produces, markdown files, produces PDFs, produces decks. Okay. So then that's like another.
At that level, they are downloading that and then they themselves are submitting it somewhere.
Correct. Correct.
Yeah.
Yeah. So that's like another level. Then I would say the next level is where you're providing it context and goals, and you're delegating responsibility to it, right? All of that is still sort of at an individual level.
Yes, but that third level, I think, to get there, the AI has to write to some system of record,
of course,
that then you are evaluating and it's evaluating, so that it's doing work and putting it somewhere. And you don't have to be the one taking it and deciding if it's right or not and then storing it somewhere. The AI is doing that. That's when you have an agent. It has enough tools and enough memory to actually move a file, create a file, move a file, put it somewhere, whether that's GitHub or that's HubSpot or it's Google Drive. It doesn't matter what the system is.
No.
That process, I think, is level 3. That's still individuals.
Correct.
And then I think you have a workflow.
Well, hold on. One thing I want to say about that level. That level requires some amount of technical competency.
Yes. More than most people have, I think.
More than most people have, right? So the first one is like not productive at all. The second one, where you're generating artifacts, that is actually productive, right? I think if you're using it to like produce work product, that would take you, if you were point, click, dragging, dropping, cut, pasting, right? But instead you're having the model do that work for you. I don't care how you slice it, like that's more productive. As long as the output is like actually part of your job, that is more productive. Okay. Now the fact that you can't measure it probably has more to do with the fact that employees don't want you to know that that's what they're doing. But it is more productive.
It's also that the productivity of a group, like an underwriting department, is based on where the bottleneck is. Usually it's like in the decision to invest this loan. So like there's a lot more now work being done, but the bottleneck hasn't changed. So the CFO looks at it and says, well, we have the same number of loans going through. So you all think you're doing more, but I don't see more revenue coming in.
Right. That third level, where you're truly delegating responsibility and informing with context, that is unquestionably productive. Yes. Because literally you're not doing the work. You've created a digital worker in that scenario, right? So that is more productive.
You said in Slack earlier, I'm going to bring it back here, AI is an accelerant, right? So that level, I forget if we're going to 3 or 4, where you're doing work and the AI itself is putting it into some repository, say it's Google Drive, whatever. You have to do that right. So you have to think about the quality control and what guardrails are going to, because it will be really fast, and that is great as long as you're going in the correct direction.
Right.
But like I'm a bad golfer, right? So I can hit my driver a long damn way, but it doesn't go straight. So like it's actually worse, because my hook is just way over, 3 fairways over. And that's kind of how I think about AI that's unguarded. Like it'll go super far quickly, but it probably isn't the right way. And so with that power, you have to then put guardrails around it. I'm using an adversarial kind of setup. And that is not only technical, you have to learn from experience. Like you test with little things that don't mean that much, and then learn. And individuals are just now trying to figure that out. I think, there'll be some bank that probably starts from scratch and starts underwriting loans much faster. But the existing banks have, a lot of regulatory power and brand power and a lot of really good people. If they can figure it out over the next 2 years, I think that'll be sort of the right time frame. And so I think this year, enterprise is going to burn a lot of tokens, learning that, gosh, we have a bottleneck in this investment committee underwrite. We look at the underwriting things, and once a month we go through things, but now we're producing 30 times as many opportunities. We need to do that once a week or whatever the process is, so they can take advantage. But they haven't got there yet because it's too new.
Yes. Okay. So all of that I agree with. So now I want to talk about the two ways in which AI can work that I understand that I can work at the team level, right? And I don't want to talk about software development teams. I want to talk about just real businesses, right? Okay. Software development teams is a whole different thing. Software factories, et cetera, et cetera. That's a deep rabbit hole. I'm talking about just regular old businesses, and we're talking about operating, right?
Yeah.
So first, I want to talk about the one that I see working a lot right now, and it harkens back to 2 stories ago, which is when you embed AI into existing software workflow, right? So you really change nothing about the workflow, but you use AI to significantly improve an existing workflow. So ambient scribe would be an example of that, right? It's like the doctor is still meeting with the patient, but instead of not facing the patient and clicking and typing, they are engaging directly with the patient. I heard several hospital leaders talking at the HFMA conference about how ambient scribes basically save an hour to an hour and a half of clinical time a day.
Yeah.
That's unquestionably more productive.
I think
per provider. Yeah. Correct.
Right.
So that is unquestionably more productive, right? It's measurable, it's clear, it's actually very statistically relevant, an hour and a half. I mean, you had some people talking about how ambient scribe has saved marriages.
Yeah.
Because doctors go home
all night.
Yes, exactly. They're not coding all night anymore. It's they got their time back, right? Okay, so and I think that there are other great examples out there of AI. Revenue cycle will be another one, right? If you in healthcare, if you look at some of how Epic has rolled out AI inside of revenue cycle, it's those teams are in fact much more productive. Okay, much more productive. So again, and this is why long software, right? If you can properly, thoughtfully, effectively embed AI in an existing tool, you're going to get the productivity, and that is going to ultimately increase the stickiness, the value creation of that existing SaaS software, right? So that's one way. The other way is through changing the fundamentals of the way that the business operates, right? And this is where we go into the fever dream of Jack Dorsey, that I think is exactly right. But right now he's saying it in such an esoteric way, most people cannot understand it, right? This whole idea that the business is an intelligence. I'll get to explaining what that means here in a second. But I first want to say the reason why I think most companies can't do it, at least in my experience, is just a lack of discipline. You know what I mean? They're just not disciplined enough to document everything, because what it means is documenting in a shared environment how every single thing about the business works and what it means and why, right? It's you're trying to document what we used to call institutional knowledge that lived in a person, right? Mm-hmm. You have to extract that institutional knowledge and put it into a shared data source, right? At that point, you combine that shared context with something as simple as skills, and teams can work together all day. With just the Claude harness, you don't need more than that. Just with the Claude harness, you could be far more productive as a team. This is especially true for small, medium-sized businesses. The problem is, most people don't understand that paradigm, right? They don't understand this whole business is as an intelligence paradigm. Second of all, they're not disciplined enough to do it. What I'm seeing is people getting mad at the AI because the AI doesn't get something right, instead of seeing every time the AI doesn't get something right as an opportunity to teach the AI how to get it right. Right? It's like a mindset issue. And so I think that is really arbitrage. The companies who get the right mindset, who can wrap their head around this business as an intelligence thing and have the discipline to actually do that, are going to be like 10x companies in terms of productivity, right? Like it's going to be ridiculous to watch how much those companies get done versus companies who don't.
So I agree with that. And I think that I would have said it differently than discipline. I think it is front loaded. You have to do a lot of documentation, a lot of definitional work about your business, and it's time, energy, and money upfront that you have to do before you see the benefits of the AI being rolled out. And so maybe that's discipline, but it's a lot of effort with you don't get that much payoff until you get that put in place.
You have to work out for 6 months before your body starts showing it. It's discipline.
Yeah.
It's discipline. Yeah. It's discipline. And I think I want to be careful about emphasizing the front-loaded piece, because it's front-loaded over a long period of time. But the reality is you can see incremental value every day that you do it. You can.
Yeah.
You know,
yeah, you can pick one I'm calling it work for one thing that your team does and focus on that. Yes, I agree with that. Let's return to the revenue cycle and ambient, because I think those are two good illustrations of pretty different opportunities. So the ambient listening is letting technology take away one of the most hated functions that the workers don't want to do, and they get an hour and a half back in their day, and they can do whatever they want with it. And maybe they'll see another patient, maybe they'll see their kids, but both things are great. And the revenue cycle is similar in that it's the ambient listening is very direct, and there's no one on the other side. So like if a health system does that, they get the benefit as they roll it out. On the revenue cycle, it is similar where all of those revenue cycle people would like help, but there are payers on the other side that are also gearing up on AI. So it's going to be more of a like an arms race, or like as you get a little advantage, you start getting reimbursed more, but then a payer adds in some other check that is better than your submittal process, and it's going to be back and forth like that. So I think the big, you have to do revenue cycle to like not fall behind, whereas ambient listening gives you an advantage. Right. You have to do both, but they're different. They're sort of different opportunities.
Yeah. I agree with that. And we want to, let's wrap up the show here. We got, 5 more stories, but I'm glad we had that conversation, because it's just far too often I am hearing people say AI doesn't drive productivity. And it's just the wrong narrative. It's demonstrably untrue. It's so untrue. It is far more around the change management issues and also the lack of understanding of how the thing works. It's like, I'll give a transparent example from today. I had a one-on-one with our chief of staff, and I said to her, hey, this thing this artifact that you created is great. This is something we're gonna have to do over and over and over again, and it ties to an OKR. You need to build a skill. And like, dude, Jess's eyes got a little bit big. You know what I mean? Because it was like, I don't know how to do that, And I just said, listen, It's easy. Just tell Claude you want to build a skill. You know what I mean? And right. And it's like, and dude, like before the podcast, she goes, I built a skill, and she like shared it with me, and I'm like, that's awesome. And she's like, I need to build a lot more. You know what I mean? That's it. It's like if she wasn't encouraged not only to do it, but that it's easy. All you got to do is just tell Claude you want to do it. You know what I mean? Like our frame of reference for doing these things is not what it is like today.
It's a hard thing to measure because it's an enabling technology. I don't know, kind of like a browser or something. I'm trying to think of the right example, but like AI itself doesn't give me value. But if I channel it through a harness or make it do work by giving it a skill, then I can get productivity out of it. And so when you just kind of log on to the ChatGPT, web interface, and you throw a prompt in there, I mean, I have people tell me all the time, I have tested it out and it's not that good. And yes, if I don't have my harness and all my context and all my skills and my connectors and my MCP connector set up, yeah, I can still use it, but it's far less powerful because I have it all like harnessed to do work in this way that helps me. And so I think people will figure it out sort of at different times. But the reason it's really important to start now is it compounds. Like as you start learning, like Jess knows how to do skills now. By next Thursday, she'll have 15 skills, and then she'll start combining the skills. I mean, I know the maturity path. And if you don't do that and you're someone Jess's age that didn't do it, a year from now, she'll be way far ahead because it's a compounding thing.
Exactly. All right, let's keep moving. OpenAI considers drastic price cuts, anticipating war for users with Anthropic. Look, you just said you use Codex. ChatGPT 5.5 was a fantastic model. Of course, Anthropic just dropped Fable, so now I guess it's ahead again. But OpenAI is definitely not out of it, and there are some moves that they can still, play in order to, make an impact at some point. Right now, they don't have the great narrative, and so they're having to sort of consider things like this. They definitely are behind Anthropic in narrative, but I think they're a powerful company, and they're going to be well capitalized, and there's going to be two great companies out there. So, I mean, do you consider this idea that they're going to like cut prices in order to capture market to be some type of bad signal? I mean, I think there's going to be a lot of this because I think to some degree tokens are ultimately going to be commoditized. So this seems just like the natural course of things. But what are your thoughts?
Yeah. I mean, it is one of the most well-known Silicon Valley playbooks, right? You raise money and then you subsidize the market to get adoption onto your platform for years. Uber is probably the best example of that. And then once everyone is out of the market except Lyft having maybe 20% or something, then you start slowly like building your business where it's profitable. Sam Altman, knows all of those playbooks, and they have lots of access to capital. And so I think Anthropic is playing a different strategy game, a very different culture and business identity. But I think OpenAI is going to be cutting prices, and that's great because I use a lot of tokens from that.
Yep. Apple unveiled a new Siri AI. Here are the key takeaways from the Wall Street Journal. I mean, I know that the stock price dropped, but to me, I think it's all relative, meaning they're coming off of the huge brand blunder that was Apple Intelligence, right? And Siri has been, I don't know how long Siri's been around, but it feels like a decade. It's just been bad for a decade. So it's simply going to take a while for Apple to shake off this bad juju for the many years of missteps around artificial intelligence. Having said that, they've got Gemini under the hood, right? So the reality is they have really kind of fixed it. Right. This is the beginning of them turning the corner. They have a new CEO that's about to take the helm. This was Tim Cook's last one. To me, I think this is the beginning of Apple showing what kind of moat it is to A, have the hardware distribution that they have, B, have the data collection that they have. But the biggest one to me that none of these other companies have that Apple has is they have the trust that they will keep your stuff private, right? It's like, yes, they are going. For me, I'm like, and not just me, you more than me, right? It's like we both have Open Brains running, which if you don't know what Open Brain is, just Google it or Google Nate B. Jones. We both have Open Brains running because we don't trust any of these frontier labs to have all our stuff, right? But I will say, like, Apple is, I'm an Apple guy, and obviously, like, I trust them with my privacy, right? So the likelihood that I would carve off little things and be okay feeding it to an Apple version of AI whereas I would not with OpenAI or even Anthropic, is just much higher. And so I think brand is going to be a huge advantage as AI seeks to consume more and more of our personal data.
I mean, I haven't actually done it, but I think I need to buy Apple. I'm long Apple. Apple is going to turn out being brilliant in not investing in a frontier model.
Yes.
Because they have the user trust, they have all of these devices out in the field, and open source models are going to be very good, more than most people need for on their phone talking to Siri this summer, like right now. And they have Gemini as well. So if you need something harder, they'll flip to that. And they didn't spend the hundreds of billions of dollars chasing that, which, unless you're Google, OpenAI, or Anthropic, maybe SpaceX, that game's over. Like that's it. And so Meta spent a ton of money, for instance, and maybe they'll monetize it through their own ad network, but it's not. Apple was smart in the long run to not chase that, I think.
I agree with everything you said. I just want to maybe enhance what you said one bit. Okay, you said spent as if like they're done spending.
Yeah, right. Yeah, it's probably every year they do.
It's a bottomless pit. This is a bottomless pit. The buying of compute, the buying of power, the buying of bandwidth, right? Like it's a bottomless pit to continue to train these things. And so these guys are all going to be constantly looking for more capital to keep their engine going. And that to me is like the masterstroke, is Apple does not have to be focused on that. They can double down on their core moat, right? Which is the hardware. I mean, the idea that any of these frontier models are going to, while they're out here scrambling for compute to keep up in this race of whose model is best, that basically switches over every 2 to 3 weeks against Apple's multi-decade experience base around building out this hardware and the supply chain and the distribution channel of their stores. It's like, dude, long Apple for sure. Like,
yeah. I mean, everyone got excited about sort of AGI, and we'll have this model that is master of the universe that we control, and that might still happen, but I think there's going to be a lot of regulatory challenges. If that does happen, it's not going to give you the same kind of power that you're dreaming about, I don't think.
There is no evidence to date that that's going to happen.
Right.
There's no evidence that any of these labs have a sustainable advantage that will allow them to pull that far ahead. Right. So
that's right.
So
and then that just leads to, I mean, there's enough competition that open source will be good. That's what I'm planning on.
Yeah, you and I are completely aligned on this theory. All right, final story. Driverless trucks are here and they're delivering bags of Doritos. So I asked you before we started recording if you had ridden in a Waymo yet, and you said you had not. I have. I rode in one in Austin maybe a month and a half ago. And it was serviceable, man. There were definitely a couple of like jerky moments, okay, that were unsettling, I have to admit, as it was responding to something that was happening. But ultimately, it did respond correctly to everything. And then the final bit was it like maneuvering through a pretty challenging small road to kind of get me to the hotel drop off, and it pulled it off. It's like, having had that one experience, I'm like, yeah, of course, driverless trucks on a highway, but like, especially like if it's at nighttime when the traffic is pretty low, and that you can get from point A to point B mostly when there's no rush hour traffic. I think for sure that there's going to be a lot more of this, and so I don't know how I feel about it, because I continue to worry about the K-shaped economy. I continue to worry about the terribly poor job we're doing of showing people how AI can actually be a benefit in their lives. And so, I continue to be worried about the callousness around how we communicate with data centers. I think you're aware of the data center that's looking to go up right next to the Nashville Zoo. I mean, it's like, dude. I don't. For me, I'm more I am more concerned from a society perspective. Like there's nothing you could show me about AI from a technology perspective that I wouldn't believe at this point. It's like, yeah, it's going to do all the things, everything. So there's not a thing we do as humans that it won't do, and then there are things that we can't do that it will do, right? So I know that part. I'm a believer. It's more, how does society adapt to that, and I believe we will, but I believe it's going to be really painful.
The only correction is this: in this story, it's also on city streets. So there are other trucks that only go on the highway, but this one's both.
Oh,
delivers,
wow.
All the way from the Pepsi distribution place to the local Walmart or Dollar General, which they got to go through all the city streets. But otherwise, I agree with you. I think that we are witnessing like the translation of human work required, right? The human has to drive the car, to now it's a capital asset. In this case, it's a robotic driving, but we're going to have real robots doing all kinds of stuff in the next, it takes a while to build hardware, so it's going to be probably roll out over the next 3 years maybe. But that's the dystopian pitchforks, like people really mad because there'll be lots and lots of human labor jobs that maybe aren't the best jobs in the world, but they're the first place you can easily get a job, and then you work your way up, and the next thing you know, you're a manager and you have a middle-class life. That pathway is not, I don't know what's going to happen to that pathway. So that's kind of the unknown piece. That driverless cars is the first really high-profile version of that, but there's going to be others.
Yeah. I think I heard somewhere that CDR, commercial drivers, like it may be the number one employer of men in America who don't have high school degrees.
Yeah.
I think I heard that somewhere.
I don't know the facts, but yeah.
So just think about that. Like that's the base we're going after, right? And you could say we're expanding capabilities. Okay, but do you feel like you ever go anywhere and you don't have access to something like?
No. We're going to get things for less money, and we'll get more stuff and have more experiences. But it's going to, switching from human labor to capital means that the owners of the business get the benefit of that, not the employees, just by definitionally how it works.
Yes.
And the capital owners of the stock market already are outpacing the people that are working for a salary. And that's a scary trend that's accelerating, if anything.
Agree. All right, man. Well, look.
Tough one to end on, but I need to find a happier story to end on next time.
Well, look, I think our job is to help people understand this stuff and give them something to think about, right? So, I think ultimately we do the optimist thing because we're entrepreneurs and we're investors, and I think there's always ways to create more value through company creation, right? And so I want to always encourage that, and that's why I'm so. That's why I'm so passionate about trying to figure out how to get this AI narrative right. I've told you I'm starting to kind of turn on the whole data center thing, right? And this goes back to your story about Walter, right? Like you're running it on GCP, like that's not one of these data centers. That's GCP, right? And you're running it with an open source model, and it's costing $75.
Yeah, but GCP is somewhere now.
No, of course, but I guess what I'm just saying is we can have distributed sovereign AI. We can, and the reason why we're not doing that is for centralization and consolidation reasons. That's why, and that's why I'm not really into this. That's why I don't think AI is synonymous with like build a data center next to the zoo. You know what I mean? It's not. It's not. Like we got to get people educated about how this stuff works.
Yeah. I agree, and I think we'll keep talking about that. But one of the best ways to protect yourself is to start a company where your labor goes into building capital value, and you have sort of, you have an asset, you have a card on both opportunities.
That's right. All right, man. Great show.
Okay, thanks.
Bye.